When is the housing market going to crash? It's trending in real estate all over YouTube right now, and everyone is wondering when the crash is coming. So today I'm going over some big stories that give us some insights into why there's no crash yet, and if it comes, where it's going to start. So let's get started. Hey, for those of you that don't know me, I'm Rick Harrison with MVP Realty here in Southwest Florida. And on this channel, I bring you the latest insights and information to help you decide if this is the right time and place to make your move to paradise. If that thought's crossed your mind, you're in the right place. So subscribe and tap the bell to stay up to date on the latest information, keeping you ahead of the curve. All right, now let's dive into today's big stories. All right, so this first story comes from Florida Realtors website. Disappointed buyers ask where's the housing crash? And this has been on a lot of people's mind. I know it's been all over YouTube lately. I've been seeing a lot of headlines, even getting some of the emails from YouTubers just talking about the housing crash and where it is. But I just want to touch on a few of the highlights as to what is going on in the housing market right now and why we aren't seeing a crash. Housing prices have increased for 3 months in a row, according to the latest Case-Shiller Home Price Index, which just came out a couple days ago. Home prices peaked in June of 2022 and then declined until January. At the start of January, they started to actually recover a bit. So we're actually now looking at only down being 0.2% below what they were at the peak. In other words, the housing boom might be over, but this pause in the real estate market isn't really shaping up as a crash. It's more like a moderate correction right now. Coming directly from Redfin, we also have homes are selling for near record highs as supply falls to new low and demand picks up. First, the median sale price was just 1.5% below its all-time high in June of last year, and the average home sold for above its list price for the first time in roughly a year. The number of homes for sale fell 15% to an all-time low in June, the biggest decline in 2 years, as elevated rates kept sellers on the sidelines. This goes back to the fact that rates were at 2.5%, 3% for most of the last couple of years. Now, with rates being 6.5%, 7% in some cases, even higher, sellers don't really have any incentive to sell because they're going to end up paying more for something that probably gives them less. Third, demand is inching up as housing hunters get used to high mortgage rates. Pending sales posted their biggest monthly increase since 2021. Even with the rates being higher, we're still seeing a lot of buyers enter the market, and that means that prices are still going to probably keep appreciating partially or slowly. The third factor in this, I know this was a big thing a lot of people were worried about, contractors and builders overbuilding. This comes from Zero Hedge. U.S. housing starts and permits plunged in June. So we're not seeing the story of 2008 where builders were just overbuilding like crazy. They're playing it very cautious this time, and unfortunately that's contributing to the fact that we have a very low amount of inventory even for new constructions compared to what the demand is right now, which means those prices are still able to rise. Only single family building permits increased in June, which is the 6th month in a row of the increases. Multifamily permits in both single family and multifamily starts drop. All right, so we've heard a lot of talk about why the crash isn't going to be in the residential market right now. At least the way things are, unless a ton of foreclosures come and a ton of layoffs would have to probably precede that, which there is a lot of layoffs in the works, but I don't know if it's going to be enough to bring inventory to where it is. Plus, the way they've been able to restructure mortgages over the last several years is probably putting a bit of a restriction on how quickly and how many foreclosures come to market. But this story happens in the other side of real estate, which is the commercial real estate market. And this market is having a lot of issues right now. The headline really sums it up, though. A $500 billion corporate debt storm builds over global economy. Now, we're not necessarily worried about the global economy, but it's not just happening here in the US, it's all over the world. But let's focus more specifically on the residential in the US, because that is where, if anything is going to happen in real estate, it's going to be that market. This is just an example of one of the capital groups that have actually started to default. Starwood Capital Group has defaulted on a $212.5 million mortgage backed by an office building in Sandy Springs in Atlanta, Georgia. This is just one example, but there are quite a few others going on. At the end of 2022, the tower was 62% leased, down from 87% in 2018 when the loan was originated. So again, when it comes to commercial real estate, when a lot of these buildings were purchased back before when mortgage rates were 3%, the same thing with when it comes to corporate capital or corporate loans, those loans were very low at that point in time. And on top of that, the vacancy rate was very low as well. So there were a lot more people using office buildings. They were paying a lot less to finance those loans. Now, because of all of the remote work and work from home that's been going on throughout the United States and really around the world, that's down from 87%. That's all the way down to 62, which is now we're looking at close to a 40% vacancy rate. On top of that, the price of money that they would have to pay now with interest rates rising. They don't have 30-year mortgages in the commercial market. These are like 5, maybe max 10-year fixed rate, and then they become a variable rate. So now that rates are changing and they're going way up, they aren't making as much money and they're paying way more for these buildings. Distressed U.S. offices jumped to $24.8 billion. So out of the $500 billion worldwide, $24.8 billion right now is in the U.S., and that's actually more than that. Most of this is just from the office market, but there are also other markets that are being hit. 22.7 billion of retail properties, including malls, and 13.5 billion of hotels were in distress. The total for all troubled commercial markets properties was almost $72 billion, up 13% from the first quarter. Now, who is it affecting? Well, one of them is Goldman Sachs, but surprisingly, a lot of these deals weren't actually backed by the big banks. They played it safe this time, and it's been more of the regional banks, which is why we saw banks like Silicon Valley Bank default and fail ultimately. So real estate woes drive billion-dollar hit for Goldman Sachs. The bank isn't the largest property lender, but it has more than $14 billion of real estate investments. Just to note, Goldman isn't alone. The office business also drove JP Morgan Chase's to $100 million in charge-offs, and the bank also built its loss reserves by $389 million, largely because of updates to certain assumptions related to office real estate. So, all right, now let's dive into our local market stats. So just to give you an idea where things are at right now with mortgages, according to NerdWallet, it went down to 6.45, so just about 6.5%. That's down a full 0.5% from 7% last week. And then bank rate also had it going down 16 basis points to 7.15%. All right, the breakdown of what happened, what changed week over week when it comes to the Cape Corals and Naples area, or Lee and Collier County. Last week, new listings were at 680. This week, listings are at 737, so that's up 8%. That's a good sign, but it's still, we're not where we were before. About 6 months ago, we had over 1,000 new listings. Now we're down to 737. With rates rising, people are starting to hold on to their homes instead of moving, and they're actually taking their homes off the market or not putting them on in the first place. Solds went from 684 to 600. That's down 13%. Pendings went from 659 to 754. That's up 14%. So this is where we see more buyers again entering the market than we have new listings coming on. And that, of course, is going to start driving prices back up. As that previous Redfin article said, we are seeing, over asking price again return. We are seeing multiple offers on homes. It really depends on the market and even sometimes the community or area, but we are seeing that enter the market again. Price decreases also went way up 12%. Of course, with that being the fact that more inventory has been sitting longer, homeowners have been asking for, like I said last time, unrealistic expectations in some of their pricing. A lot of those homes are coming down and adjusting to the market conditions. Latest inventory breakdown in this area. Single families, we gained only 29 units this week. Still a gain, but 29 units in single families. Condos, we lost 22, so we had a net gain of 67. We had a net gain of 7 this week. Just to put that into perspective, 2 weeks ago, we had over 300 units gained in both markets. So this is way down, and it has pretty much stagnated as far as inventory. Multifamilies, still hovering right around the 110, 120 range. We're at 120. It's up 4 this week. Foreclosures up 5, but again, we haven't seen this get past really, I think, 45 foreclosures at any one given time for the last 3 years. Total sales, we had 470 total sales over the last 7 days. That is down quite a bit from 5, I believe it was 5 over 500. And then cash sales are down as well to 206. And that's the percentage of cash sales is also down from 50% to now 43%. So it seems that more of the buyers currently are actually financing, not paying cash. All right, just to do a month over month comparison and year over year comparison for this area, June, the market review, median sales was actually up compared to a month ago. So it was up 1%. Like I said, prices have been increasing around the 1 or 2% range in this area. And overall, over year, it's still up 2%. So closed sales down almost 12.5% from last month. It's also down year over year. Days on market's up another 10%. We're now seeing homes sitting on average for 33 days on market. Some cases that's up to 2 months now. Active inventory is also down. So even though new listings are coming on and new inventory is coming on, we're also at the same time losing inventory overall. We have more buyers entering the market and less sellers entering the market. And that is what is actually contributing to the overall active inventory being down month over month and year over year. All right, the northern part of Southwest Florida, Punta Gorda to Sarasota, new listings went from 610 to 595. That's down just 3%. Solds went from 696 to 596. That's down 15%. Pendings went actually up from 571 to 664. That's up 16%. And price decreases was also up 12% in this area. Inventory in the northern half, single families lost 59 units and condos lost 57 units. So we went from having a gain of 265 last week to a loss of 116 this week. That's a 350 unit swing. Multifamilies, that's up 6 to 81. That is up a decent amount actually for multifamilies in that area. I'm going to go back to something I probably said 6 to 12 months ago, that this area seemed like a lot of multifamilies were selling in that area. I think this was probably a pretty hot area for flippers. And if that's the case right now, they're all getting stuck with their foot in the water because interest rates have changed. A lot of those are on variable rates, or even in a lot of cases, hard money loans, which also adjust with interest rates. And because of that, they're probably getting squeezed out when a lot of multifamilies are coming back on the market because they're paying more than what they're getting right now. Foreclosures, that was up 5. Still no drastic changes in the foreclosure market yet. Total sales over the last 7 days, 522 total. That's down, but the amount of cash sales in that area was up. That's up to 53. That's up to 48%, up from 43% last week. For this area, the month over month June statistics. So active listings were up both month over month and year over year in this area. New listings were also up 1% from last month, but overall they're down 24% from last year. Pending sales, both down month over month and year over year. And then we also had days on market, that's down 2% month over month, but up 207% year over year. Then as at the same time, same as the southern part of Southwest Florida, this area also has the average sales price going up 1% month over month and 2% year over year. Key takeaways for today. So one, the residential market is picking up again. So buyers, you need to be aware about that. Things are still very competitive. You might not be able to get as many concessions from sellers because the inventory is so low and there are a lot more buyers starting to enter the market again. Resale inventory is pretty much stagnating right now in both markets. In some cases, it is actually decreasing. So that's something to be aware of as a buyer as well. You're probably not going to be seeing as many listings coming on the market, at least right now. And at the same time, as a seller, that's a good thing because that means you can probably get more for your house than probably could have gotten a month or two ago. At the same time, though, you still need to be realistic with pricing your home. You can't be reaching for the stars right now because the conditions for the market and for buyers right now are just not positive enough to really, start reaching for the stars again with prices. Again, also builders are staying pretty cautious. They're not overbuilding right now, so we're not going to get a huge influx of inventory from new builders unless a lot of them go under, which could happen, I guess. Foreclosures aren't helping yet, so keep that in mind. And then home prices are starting to increase again, so that is contributing to buying still being competitive. As always, we've got a lot to keep an eye on, and that's exactly what I do on this channel every week. So don't forget to subscribe. And if you're planning to buy or sell in Southwest Florida in the next 6 to 12 months, I've included a bunch of free resources and programs in the description to help you make your buying and selling experience simple and stress-free. And if you have questions, leave them in the comments or reach out to me directly, as many of you do. And I thank you all for that. My contact link is in the description. Thanks again for watching. I hope to see you on the next video. But until then, stay safe, stay positive, and more importantly, stay free.